Welcome to Sales Tax and More, your go-to resource for all things state tax related. Now here's your host, Michael Fleming.
Hi, Mike Fleming here, founder of Sales Tax and More, and today's co-host of the Sales Tax and More podcast, where we talk about everybody's favorite topic, which, Ellie, it's of course sales tax. And today we're going to talk about international sellers. But before I do, let me introduce you to my co-host, Ellie Moffitt, and she can share some information with you.
Hi, I'm Ellie. I'm going to share some information with you. So, great to be here. The first piece of information, please like and subscribe to this podcast. It really helps us out, especially if you're learning things or you're enjoying listening. And second is just a little bit about sales tax and more. So, we are a full service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So, we do a lot of sales tax returns, sales tax registrations, consultations, research, audit defense, exemption certificate management, and like our name states, more. So if you have questions about our services or you'd like to work with us, please reach out. We'd love to hear from you and we'd love to work with you as well. So Mike, that's my spiel. Let's get into it. This is about international sellers. So who is considered an international seller?
Well, we could probably answer that a couple of different ways, but let's keep it simple. We consider an international seller to be anyone whose primary place of business is outside of the United States, or even if their primary place of business is in the United States, if they're formed outside of the United States or if they reside outside of the United States.
All right. Yeah, I think that's a great question to address right off the bat, Mike. One of our most viewed videos on YouTube is about international sellers, and so I think this is a good addition. Hopefully, if you've already seen that video and now you're here for this podcast, you're having a great time. You're gonna see Mike and I on video. So, Mike, what are some of the common issues that international sellers face?
Well, I think the biggest issue is not realizing that they may have an obligation to collect and remit sales tax here in the United States. For years, you had to have some sort of physical presence in the United States in order to be required to collect and remit sales tax. However, that changed in 2018. In 2018, we had the South Dakota versus Wayfair case, and the U.S. Supreme Court said that economic nexus can move forward. And an economic nexus is measured by an amount of sales or number of transactions into a state. And it makes no distinction between a domestic seller or an international seller. So if you're selling into a state and have over a certain dollar threshold or a certain dollar or a certain number of transactions, and each state has different figures, then you have a requirement to collect and remit the sales taxes. So that's number one. Number two, if you decide that you want to become compliant and want to register and collect the taxes, now you have to remit those taxes. And a lot of the states don't allow transfers from foreign banks. So that's another hurdle. None of them used to allow credit cards. There are less than a handful that do now, like California. But by and large, you would need someone like us. We open up a sub account underneath our main account for every one of our clients. So the international client would then wire our sub account the money and we would pay your taxes from our sub account. So those are two of the biggest issues. The third one is just understanding the laws. I mean, United States is different than most of the other countries out there. Most of the countries have a form of the VAT, value-added tax, and the U.S. is very different from a VAT tax. That's sort of double value-added tax, very different from a VAT. Not a VAT tax. That's doubling up on my T's there. So just having a basic understanding of everything, and we can help with that also. Any questions that you have, we can generally answer some of them off the top of our head. Others may require research, but of course, we have all of the resources in order to get you the right answers. But those would be the top three things. Number one, understanding that you may have a responsibility to collect the tax, and then getting registered. Once you're registered, remitting the tax, there are some extra hurdles for international sellers there. And number three, just a basis of the tax itself. There's a lot of nuances, and you've got to know the answers to some of those questions.
Speaking of some of those questions, Mike, so does someone, so does an international seller need a US entity to sell in the United States or collect sales tax? And are there any benefits of opening a US entity? Oof, I don't know if I can say that word, entity.
Yeah. Let's start with the easy one. No, you do not need a U.S. entity to sell into the United States, um, or to collect sales tax. You can do it with your foreign entity. It doesn't have any impact on that. We can even register the foreign entity to collect and remit the sales tax. Now, there are some additional hurdles when registering for an entity. Number one, most of the states want an FEIN number. Now, foreign entities, we can get an FEIN number for you, so that's not too bad. But the responsible parties, in other words, the owners or the officers, someone has to be a responsible party, and they need a Social Security number. That's where things start to get a little bit uh, confusing. Now, most states have a workaround. Some of the workarounds are very easy. Some of the states are a little bit tougher. But that's where, it gets a little bit tougher. But even opening up a U.S. entity doesn't protect you from that, because U.S. entities, you still need a responsible party, and you still need them with a Social Security number. So you're going to run into the same issue whether you have a U.S. entity or not. Now, if you're trying to open up a bank account, generally you're going to need a U.S. entity, but it is not easy opening up a U.S. bank account. Um, and even these people who tell you, oh, it's real easy, just do these things. Generally, they're going to want you to put them on the bank account there. So I have a big issue with that. So it's not easy opening up a U.S. bank account from overseas. I mean, you might be able to open up a personal account if you come here personally and open up an account. That's a whole nother story. Um, but for tax purposes, um, income tax purposes, I mean, generally, because of the tax treaties, if you're in a tax treaty country, you're going to be paying taxes in your home country unless they're legally due here. So by opening up a U.S. entity and taking certain steps, those taxes may be legally due in the United States, which would then maybe, depending on what country you're in, taxed at a lower rate. So that could be a benefit, but that's outside of what we generally do. That gets into income tax planning, and that's not one of the services, or international income tax planning is not one of the services that we do offer, but it does answer the question. Is it a benefit of that? Yes, but you'd want to get with your local tax people and see if that's a strategy that can be employed.
All right, thank you so much, Mike. And last question we have for today in this episode, what is a good strategy for international sellers who are trying to get compliant? And what are some resources that they can utilize?
All right, well, let's a good strategy, learn as much as you can. There are a lot of YouTube videos that we put out there. That's a resource. There are a lot of podcasts we put out there. There are a lot of free webinars that we put out there. So a good strategy is increasing your knowledge base about U.S. taxes. You got to be careful though, because not everything you read or see on the internet is true. Some of it is misinformation put out there by people who are well-meaning, but they just don't know all of the answers. And with today's AI, everyone thinks they're a sales tax expert or an income tax expert or an expert on anything. And based on today's AI, it's not artificially intelligent. It just does things quicker. It scans through all of the things on the internet a lot quicker than you could. But if everything that it's reading on the internet is wrong, then it's going to give you wrong answers. And that's the major limitation right now. There's so much misinformation or flat out wrong information on the internet. You got to know whose information you're looking at. So I'm a little bit partial to ours. There are other good sources out there, but we have a whole bunch of free resources that you can take a look at, whether it be the webinars, like I mentioned, our podcasts like this, or any of our YouTube videos, or you can pick up the phone and call and talk to someone. And there are other companies like us that can offer correct answers. Just relying on the internet without knowing where those answers came from, I think is something that you got to look out for.
All right. Thank you so much, Mike. And thank you everyone for listening today. If you have sales tax needs, like Mike said, we're partial to our own resources, to our own services, but we'd love to hear from you. We'd love to work with you. And you can reach out to me directly at emoffat, EMOFFAT at salestaxandmore.com, or just reach out to us via our website, salestaxandmore.com. And in addition to our webinars, or to our podcast, to our services, who even knows at this point? In addition to what you're hearing right now, we have a ton of other free resources, like Mike just mentioned. Just go on our website and you can get your hands on those. So thank you so much, Mike.
Well, thank you, everyone. And we hope to see you on the next installment of the Sales Tax and More podcast. Bye-bye, everyone.
Thanks for listening. Be sure to hit subscribe and check out all the resources we have out on the web.